No wonder everyone in the city is so rich. This is easy. And it's been hard to get here, but one meeting, $100 million. Back in my mind, it's like thinking I knew 20 meetings, I'm 2 million before I know it. It's great to see your competitors do well. There's plenty of the pie to go around. There's a whole group of people in the world who are miserable old toads who don't want that to happen. I'd use leverage and power and money to stop it. We've developed this really cool product. We've come out of nowhere. We're new, we've innovated, and that gets you meeting. It also, at the same time, gets you the 3 no's of the apocalypse, which is no brand, no track record, no assets, and then the 4th one, no chance. That was the original Osmosis. You went from cap raising to private equity fund of funds to what it is today, systematic listed equity, because that investor in that meeting said if you build something that's capturing this green revolution, no guarantees, but if it looks good, I'll give you 50 or 100 million.
Ben, thanks for coming on with me today.
Thanks, Scott.
Appreciate it. I'm super anxious to get into everything you're doing at Osmosis. And that's because I haven't really done anything quant-oriented or systematic-oriented in high impact and high alpha public equities lately. But with every guest that I bring on, I always start at the beginning. First of all, just to familiarize myself with your background and to get to know you, because your journey to becoming a sustainable investor and how you got there is just as interesting for me as where you're at for today. So I want to start from where you grew up and follow your path until around 2007, which according to my research is when it seems like you emerged from the protected persons service, because I've found absolutely nothing about your early life anywhere. Describe your childhood growing up, and I'd like you also to talk about your parents and your family and any other formative experiences you had that might have influenced you to commit yourself to sustainable investing, just to give us a little bit of color so we get a good idea from where you come and your journey to the sustainable investing industry.
I was born in near a place called Scunthorpe in the UK, which is in the north of England. Not a particularly attractive part of the world, nor is there much to do there. What were 5 children? Father was an engineer and an inventor, fought in the war, so was old when he had me. I was maybe the afterthought.
He was an inventor.
An engineering inventor. The age gap obviously between us is quite large, and I spent the majority of my life actually away from home. I was left or sent to school at 6 or 7 years old, up to an even further north place, actually, in Scarborough, which actually I loved. It was a chance to escape the solitude of Lincolnshire, what's now called Humberside, and hang out with people my own age, which was nice, despite it being quite rigorous and vigorous in the way that they treated you. It was more like a prison camp than a boarding school, but I thoroughly enjoyed it. I had a great time with it.
Why were you sent away at such a young age?
Well, that was kind of the done thing, I think, for love. If your parents could afford to send you away and you were lucky enough to do that, leaving home at 7 or 8 was quite common. I'd never do it now. I didn't do it with my children, but and also obviously my father was much older. I think he probably had me maybe when he was 50-ish, and I'm 50-ish now. The last thing I could think of would be having a 6-year-old boy around the house.
Time for him to enjoy life a bit.
But I enjoyed the outsourcing experiment, certainly for that first tranche. It was all sports and lots of fun and a very rigorous, as I mentioned, a quite vigorous headmaster in all the right ways. Obviously there's a lot of clouded views now on those kind of schools and enterprises, but luckily I was there, at a good school with a good headmaster who motivated, educated us, and it was all very traditional. So I spent my kind of younger years there, and then I'd come back and, at the house, we had a, old manor house in the middle of the countryside. So I spent my holidays before I could learn to drive, so I had my own ability to escape. I spent my holidays hunting, shooting, fishing, making dens, just generally, having a pretty glorious, I would say, childhood. But I was very closeted as well. I was born with a heart defect, which I actually always forget about, apart from I've got a massive 3-foot scar running across my back, which often I refer to as when I was younger, I always used to tell girls on beaches it was a shark bite and try and get the sympathy vote. But because I'd had this major heart operation when I was younger, I was very positive certainly by my mother, but allowed lots of freedom at the same time. So it was an interesting dichotomy. My 3 sisters and brothers would probably just say that I was just incredibly spoiled. And I think in hindsight, I probably was. But I made the most of it, why not? So that was an enjoyable time. And then I left that school. I think you leave when you're 12, 13, and I wasn't very academic. I think that had been proved out at the school. I was more into sports. I don't have ADHD, or at least I haven't been diagnosed with it. But I do have, I find it still today actually challenging to focus on one singular item for a long time, which is, probably a positive actually in the job I have now, because there's always hundreds of different things going on that require attention. So I left that school and went to another one in Leicestershire called Uppingham, which is a very old traditional public school, all boys until 6th form, when they just started allowing girls to attend. And so the focus obviously shifted as you got to 16. Again, more from academics, probably more towards integrating yourself with the female population of the school and all the fun and games that ensued there. So again, I spent 5, 6, 7 years there having a thoroughly enjoyable time and failing absolutely miserably, again, academically, apart from across subjects that I was interested in, which, given that I'm now, running a systematic quant firm, one would assume that might be math and physics, but no, it wasn't. It was English and art history, geology. Those are the subjects that I kind of did quite well in. Actually, my English teacher was J.R. Tolkien's son or grandson. I can never quite recall in my memory. But he was a very enthusiastic and liberally minded. And actually, I think amongst all the teachers there, actually took pity on those that were more challenged, maybe academically, or at least not as enthused academically, to try and light a fire within them. And it worked to the extent that I wanted to become a journalist. That was my ambition and my goal in life. Actually, I wanted to be a war reporter. That was really what I wanted to be. I think I wanted to go to Afghanistan and be a war reporter, war photographer. And that was drilled out of me by my conventional parents, who informed me that there was absolutely no money in journalism. What a ridiculous idea. Think on and do something different with your life. And I did. And it kind of went a little bit downhill from there, actually, for a period of time.
What do you mean it went downhill from there?
I think I found that when you're not enthused and motivated to pursue the things that you love, then certainly with a personality like mine, you lose the motivation to learn about the things that you're not that interested in even more. And that leaves a void. It leaves you can drift. And if you don't find direction, that can be actually, in hindsight, both the positive and the negative. My kids are late teens, early 20s now, and I don't think any of them know what they want to do. And I'm not sitting here panicking. I'd be delighted if one wanted to be a doctor and lawyer and investment banker, and it was all sorted and they were all off to Oxford and things, and it was just a defined career path. But actually, I think if you're not entirely certain of where you want to be, and drifting allows you to touch and do things and make mistakes, often the learning process is harder because you learn the hard way, but maybe you learn more skills and develop different personalities and characteristics as a consequence. And I certainly did drift when I left Uppingham. My friends all took the gap year, and I was so looking forward to that, because in my mind now it's just a year of partying, beaches, and having fun. At which point I was informed by my parents, I think, and history plays with the mind. So I think I was informed by my parents that even though I'd saved the money in a bank account since like the age of 5, and there was a few £1,000s in there, I wasn't allowed it. I'd have to go and earn the money again to go on that trip. And that took me to, I had to get out of the house, obviously. Older parents, brothers and sisters had left home. So the first opportunity I had, lots of friends lived down near Cambridge. So I went to Cambridge and lived in a friend's house, became a barman in a pizza restaurant, living like normal people do, having to earn your way, rather than coming from this kind of background where lots of my friends would be either have trust funds and given money, or So they all departed on their gap years and would fly back into Cambridge or London, then back to Cambridge to come and spend time with me before they went off on these new ventures. And I was finding that the money I was earning from being apartment was really enough just to buy my own beer and pay my own rent, and really not save enough money to go on that gap year. So I spent my year really in Cambridge doing nothing apart from tending tables, waiting bar, and finding that I had a massive propensity to party. And enjoy life magnificently. And I was adopted by quite a lot of hippies. And there were lots of kind of journeys in and out of that lifestyle over that period of time as well. So I was jumping between different social classes, different people, not really learning anything, obviously academically, waiting to go to university, or actually awaiting my A-level results first to see which university I could go to. And then unfortunately, getting called out home to open up that dreaded envelope and seeing that there probably wasn't going to be a university place open for me because my academics had been quite poor. And that was really fueled by the fact that I spent my last probably 3 months at Uppingham rather than studying. There was a swimming pool in my house, drinking gin and tonics at 11 o'clock by the pool rather than sitting in my study and revising for my exams. So I didn't really do myself justice, I suppose, in hindsight. Some of the regrets I have, obviously, in life, when you look back, are maybe that I didn't focus enough in those younger days, because had I, maybe some of the challenges that I faced in the latter parts of my career may not have been so hard. Maybe I've been more academically gifted, trained, grounded, and I've had to pick up on all of that kind of self-learning over the last 17 years, certainly with regards to finance. So yeah, some of the regret, but boy, did I have a great time. So probably not that much regret. So didn't get my A-levels that I needed and found myself going back to Cambridge, not to wait bars, but to do retakes. And I was told I needed one more grade to get into, not a university, or they are universities now, but a polytechnic, which says how bad my A-levels really were. And I was told that the retake college, the one that always guaranteed me that grade, was Chinese politics. So I studied Chinese politics for, I think, 6 months. And on the day of the retake exam, my car broke down. I got there, but with only like 25, 30 minutes to spare. And they let me in, and all I could write on the paper was a tale of woe, that I hadn't had the time, that I only need 1 point. And if you're marking this and you have a heart. And so using my English language skills, rather than anything to do with Chinese politics, to make the case for the reviewer, the examiner, to give me at least, I think it was a C grade. And then I held with bated breath and waited for that next envelope to arrive, and they came back with a C, which I thought was rather wonderful. So whoever that was, thank you. And then that opened up the world of, optionality, sub-optionality on what to study. And English I still wanted to do, but was kind of misdirected away from that. And my other passion in life was cooking. Even at that age, I loved food. So I thought I wanted to become a chef. I'd worked in bars and restaurants during that kind of year of my gap year. Really enjoyed it. Loved the social aspect of it. See that you could build a business and be entrepreneurial. I'd had my first entrepreneurial kind of touching of the sides of doing things entrepreneurial during that year. I had a 2CV, one of those cars, a Dushevu. I used to go off and buy 500 cans of beer from a wholesaler and drive around the parks at 10:30 at night selling beer for £1.50 a can to students every Thursday, Friday and Saturday nights. And actually did financially pretty well. So I guess there was always a bug inside of me. And I thought if you could buy the love of, of maybe your food as well as trying to make money, then maybe doing something in hotel catering would be the way. So I opted to go to Oxford Polytechnic, as it was then there, to do hotel and catering management. And that didn't end out particularly well either. So I did about a year there. Found out when I got there that there wasn't so much focus on the cooking side, a bit that I loved, but a lot of economics. It was a modular course, so you had to choose like 9 or 10 subjects. And again, I had interest in 3 of them, but they made up maybe 5% of the course, and the other 7 made up, 95%, and I wasn't interested in them. But it was reasonably easy, so I didn't need to attend lectures. I did the things I loved. I had a job whilst I was doing this, working in a restaurant. Actually, I was managing a kitchen of a small Jamaican restaurant, cooking Jamaican food, which is an interesting experience. So I did that, got to the end of the first year. My second year was work placement. And the work placement I'd organised was through a friend of a friend, which was to work in Banff Springs in Canada at a ski resort, which I thought would just be wonderful. It'd be a year skiing, hiking, cooking amazing food, hanging out with, the rich and the famous, and just having a genuinely wonderful life. And my tutor called me in his office and said, well, congratulations on passing your first year. I see you've organised your own placement, and we just want to let you know that that's not the placement you'll be doing. Because you haven't attended many of the lectures, we think you should be more grounded in work in a placement we've organised for you. And we've been in contact with the hotel that you've organised, and we've given it to one of the students that wouldn't get one of those opportunities. We hope you don't mind.
How nice.
I was a little bit livid, but I could see some rationale behind that. And then I asked, where was I going? And they said, you're going to go to Oxford University kitchens to cook for the students. And I said, oh my God, you've got to be joking, because quite a lot of my friends were at the university. I don't want to be waking up in the morning and cooking them bacon and eggs. I mean, it's kind of demeaning. Yes, it's below me. And it's fascinating because in the summer, the colleges host all these thousands of American academics that come in. The kitchens are amazing. You get your own cottage on the ground. They sold it to me. I said, okay, I'm in. And so I started in that placement, the cottage in the ground. I co-shared it with a 94-year-old woman. It wasn't the party palace I thought it was going to be in these beautiful grounds. It was, she was lovely, by the way, and we got on like a house, but it certainly wasn't, the place for entertainment. And the kitchen was amazing. The chef was amazing. He had his own catering business doing weddings. I remember opening up the freezers on day one and this shark hanging there. And he said, yeah, we're going to be doing shark. And I was like, oh, this is going to be amazing. I remember making like 20,000 profiteroles every morning. So I did all of that for 4 months over the summer. That was the first part of the placement.
What was the 94-year-old woman doing?
She had a grace and favour cottage. So she used to be, I didn't know, a housekeeper or something. So she was entitled to live there until the day that she died. Or her husband had been a groundsman or something. So a beautiful little cottage. But I had the spare room. So it was... I like to party and, and working chef's hours is kind of antisocial. There is a different subculture around that lifestyle. You're going out when everyone else is going to bed. You finish your shift at 2 a.m. and everyone else is going out. So you have your own bars you go to. So, we would meet like ships in the night occasionally and probably both be equally horrified by the way we looked. So it was, but it was an amenable and nice enough relationship. But once the summer had ended, it was then back to university life. When indeed, in the morning, on the first morning, chef's wives, big ham, behind the table, in the main halls, at Christchurch College, I'm standing there serving sausage, egg, and bacon to people that I know. And I'm looking and I think, God, what am I going to learn in 3 months doing this? This is just pointless. This is not just drifting. This is drifting with an academic stamp on top of it. It's the worst of all worlds because I'm learning nothing, paying for the pleasure of doing it. And I'm just going to get older, less informed, no opportunity. So I threw it in. I just said, there's no point. Unless I'm going to go somewhere that's amazing, that's going to teach me stuff, there's no point. I'm literally cheap labor and I don't want to do that. So I went to see my tutor, threw it in, went back to the Jamaican restaurant and said, okay, I'm back. And he said, that's good. Do you want to take over running the whole bar restaurant? And I said, yeah. He said, all right, there's no one coming here anymore, Ben. It's all empty. If you can revive it, you can take a percentage of the profits. And it's like, okay, this sounds like a good trade because I'm pretty sociable. I know lots of people. There was a club opposite. Raving had just started. So this thing was going on till 5, 6 in the morning. So I knew I could capture, the rave was coming out. So I could start early doing breakfast, coffees and teas, make money on that, move to lunch. So I did that. And the restaurant was called the Carlton Blue and his name was Carlton. And it turned out that Carlton was quite blue in the sense that the police were after him. So he did a runner to Jamaica. I found that out by knocking on his door because suppliers were coming in and out, asking for money. This had been going on for about 6 or 7 months because he obviously, waking Carlton, he was a big guy. We didn't want to do it. Eventually I gave up, knocked the door down, and it was empty. And there's a note in there for me saying, Ben, I've left up, gone back to Jamaica. It's all yours, whatever's left. I'd been paid for a long time. There was still quite a lot of stock. So I threw a weekend of parties at this restaurant, took all the cash for myself. It didn't amount to a lot in today's money, but it was several £1,000s. And that opened my eyes to risk, to believing people and taking people for what they say too easily, maybe even being manipulated a little bit. And the next part of the journey is I had a girlfriend who lived in London, and I said, okay, London's where the bright lights are. I'm moving down there, and I've got to consider what I do. So I went to London. I lived in a very magnificent house in Lowndes Square, with courtesy of her family, who didn't live there, but, they lived out in Hong Kong and around the world. Decided I wanted to go back to university. So I gave it another game. And this time I thought, okay, I've really got to learn about business, and maybe doing economics would be a great thing to do. So I went and applied and got into a university in London to read economics. And I went there and I attended 5 lectures, I think maybe 6, and didn't understand a word of what the lecturer was talking about, because she had a very heavily Indian accent, actually, and none of us could. And I was really struggling to concentrate and focus again. And I said, look, again, we're paying for this. I can't really understand. The other courses and lectures weren't really of great interest to me. And I said, okay, I don't think academia is for me. I've got to find somewhere to go and work and get a job and start earning real money. That's when I started my first business, because no one would employ me, believe it or not.
How old are you at this point?
Early 20s.
Like 22, 23?
21, 22, something like that.
Right.
A couple of friends of mine, gosh, this is old days now, they'd set up a business doing post. They were delivering post around London. You had independent delivery services, not Royal Mail, but business to business post and courier delivery. And I don't know how they got into this, because one was a chef and the other one had been in hotel catering. And here they were operating this kind of courier business. And I had a computer and they didn't have one. And they said, oh, you should come and join us. And I said, well, what do you do? And I didn't really understand it. And it turned out they wanted my computer to print labels. They didn't want me. They wanted the label printing from the computer. Anyway, so I joined them. They were making reasonable money, but I was just thinking, this isn't really for me. There's no future. And again, in this, I'm trying something new. It was interesting, but it wasn't, there's no longevity to it. And this is part of the drifting. So from there, I had another friend, this is how all this worked, who worked for a German filing company called I think it was called Cardex. So from filing to filing, there is a link from post to filing. They sold automated filing machines to go on office floors that rotated. So it was kind of for efficiency, yes. Quite dull, but expensive. My friend was selling these things at the banks, and he needed people to move files from one drawer cabinet to the levered rotating system. And he said, look, we'll pay you in cash, and can you assemble a team? Because there's lots of these. We're selling hundreds of these machines. They take hundreds of thousands of files. And I said, yeah, I can get a team together. I know lots of unemployed people because I am drifting in and out of unemployment myself. And I'm sure they'd like the menial aspect. It's not complex and it pays quite well. So I got a team together. We did probably 2 or 3 jobs for HSBC, Citibank. And I saw an opportunity. Again, there was something buzzing inside me, entrepreneurial. And I said, I should formalize this. So I jokingly named the company. And I got some sweatshirts printed out. And on the front was profile. And on the back was active. And the tagline was for all your safer filing. So prophylactics, safer filing. And it grew quite quickly. It grew, I had like 30 people. I was working down for, multiple contracts in different parts of the country at the same time. The margins were huge. And I built that very quickly over kind of 18 months. And it was quite exciting. It was exhausting. I was finishing in London at 1 a.m. at Citigroup and driving in a car to get to Pfizer for 4 or 5 a.m. to pick up people that I'd hired a house for to come in and do this filing. But what I lacked again was any business understanding. Pretty good with the idea, monetization, but the structuring of the company and legitimizing the operation, one could argue, was kind of the weak point. Because I had no training, I had no advice or guidance.
What year are we talking about? Where is this in the scheme of technology and all that?
1990. 91, something like that, 92.
So we're definitely pre-internet.
That lasted for about a year. And I hadn't had a holiday at that point for a year. And I needed to go away on holiday. And I trusted my second lieutenant to manage the operation while I was away. And basically just one expression was, please don't fuck it up. This is something good. It's making a lot of money. We could really scale this. Get back for 2 weeks on holiday, and there's someone just waiting outside the house for me. And it's someone serving papers. I opened this up, and the team, while I've been away, have misfiled the corporate finance department's filing system from, I think, the 1980s to 1992. One of the city's major investment banks. So they've taken all the files out of one file and put it in the wrong one in another. So they couldn't find any of their information. So a very costly mistake. And there was nothing they could do to me now as a small business, but, they were going to go after this German company. So I called the German company up and said, I think this filing business might be over. You should take it on. And they did. And this is a stage part of the story. So they did take it on. And the guy who had been selling those filing machines, when I was running one of my other businesses many years later, he had taken that business on and done a small MBO, taken it out of the company and grown it into quite a large business. And I didn't know this. And I was looking through the windows of my offices in the business that I had grown then. I hadn't seen this guy for, 8, 9 years, 10 years. And I looked through my window across a small courtyard into the next window and saw this guy. Waved at him and he saw me, caught my eye, we met in the... So what are you doing? He said, that business that you managed to take up and we took off your hands for free. I've just sold it for £15 million. I was like, oh my God. So it's great that, again, I had the idea and there was definitely something in it, but I hadn't got the skills, the maturity, the understanding, I think, to be able to see it through. And I look at young people now today, forming these tech firms and, and they've come out, and that grounding maybe that you do that, which is why I do believe in a, solid academic grounding and business training. Not for everyone, but you could see how they can organize and facilitate and structure and maybe not fall down as many rabbit holes, lose so many opportunities, or make their lives as hard as it has to be, which I pretty much spent a whole career doing, to be honest, making my life much harder than it needs to be. That takes me up to 1992, 1993, 1994 maybe. And I'm thinking, okay, what now? And I applied for an advert in the London Evening Standard for a recruitment consultant. Offices based out of Cannon Street, a company called the Allison Partnership. There is an old adage that if you can't find a job in any professional services firm, you'll end up becoming a headhunter. And, obviously I didn't have the academics to go on graduate programs, and obviously I was getting older. So I went in for an interview at this firm, and it was like 6 guys in their 60s doing IT recruitment. So it must have been late 90s then. IT was kind of, certainly, obviously all the old mainframe stuff was there, but IT was beginning to pick up pace and evolve. And for some reason they hired me. I just never understand why. I think my salary was £14,000 or £15,000 a year. I had no real clue about technology. I didn't know anything about headhunting. And I joined them. And on day one, they said, what we'd like you to do is set up our investment banking front office search business. I'm more like 24 or something. It's like, my God, never done search, never done pandemic. Don't know anything about investment banking. But yeah, why not? I'll give it a go. How hard can it be? I'm quite personable, I can chat to anyone. And in 6 months, I placed the chief economist to UBS. And I think it made something like £200,000. And I think I was paid 30% of that. So £60,000 from a standing start. And it started to build a bit of a reputation. There was this young guy who was able to do things maybe a little bit differently, was building different networks, somehow was managing people to engage with him. And I started, placing quite senior people around the industry. One day I called up a potential candidate up and said, hi, it's Ben. He said, oh, you just called me. I said, no, I haven't. He said, no, you have. I said, no, I haven't. He said, no, we just had a call literally 10 minutes ago. And I said, okay, well, I haven't. Put the phone down. And about half an hour later, my phone rang, and it was from another headhunting firm saying, we'd like you to come. I used to be headhunted. The headhunter was being headhunted. we'd like you to come in and have a chat with us. And it was for a guy called James Carn, who is one of the UK's leading entrepreneurs. He had a headhunting business, more of a quickly expanding but lower grade recruitment business. So he wanted to maybe bring more into search. So I went for an interview with their finance team that covered the city. And one of the guys there was an old friend of mine from school. And an old trick of headhunters is sometimes you don't use your name because people say, oh, hello, John, I'm your desk mate might know that it's a headhunter. And not everyone wants to know that they've been headhunted. So he'd been using my name because he never thought I'd get a job in the city. So I was a safe bet. And so good things and bad things come from that. One, he helped build my profile without me doing any work because he was obviously using my name on occasion, not all the time. So that probably made me operate at twice the capacity I could potentially. And they said, look, we'd love you to come and join. And I did. I just left. I went back to the guys and been nice knowing you, but sitting in an office with 60, 65-year-old guys is not my idea of a great working environment, even though you've been really kind to me. And I've probably been there a year, I think probably at that point. And I left to go and join this firm called Alexander Now. That firm was eye-opener. I probably learned more lessons in how not to manage people working there than I probably, you could experience of working at 100 different other firms. It was it was a volume game. So, and I quite like, although I'd probably make a little bit arrogant maybe to think that out, but I quite like complex issues, trying to find sophisticated solutions, driving and articulating an approach through a business that brings people with them, be they clients or colleagues. And there it's all about how many calls have you made in an hour? Why haven't you made more calls? It's kind of that old seller take the phone to your hand. Yeah. James Carn, who's this kind of, OBE, CBE guy, he had cameras on each floor and loudspeakers. And if you weren't on the phone, it'd be like, why are you on the phone? Coming through the speaker. And obviously they'd sold me as being to join the firm as being a sophisticated firm, wanting to scale and grow. And actually, when you got there, it was kind of very low rent. But I kind of articulated it to them, certainly to my direct boss. To his credit, young guy kind of said, okay, you can go for more quality business, retained business, try and build these bigger relationships for us, and gave me the bandwidth to do it. And I managed to do that. So I landed some really huge accounts, that were generating, millions of pounds a year for the firm. The firm, set up a solutions-based business. It kind of been operating for it in the background. There was some work there which helped scale it. And it became kind of private equity targeted. The founder, James Carn, made $100 million or something off the sale of it. And then went on to become a serial investor into other headhunting firms. But my journey there also ended, in less precipitous circumstances, unfortunately. So I think I probably there 3 or 4 years, and I'd landed a big contract to help. But this is when .com was really taking off, and everyone was wanting to be an internet trader. The banks were looking to install on high streets trading rooms for the general public. You didn't have it on your phone, so you go and sit down in UBS's office, Credit Suisse, retail on the high street, and pump stocks. They wanted to get your order flow. And I landed a contract with one of the big Swiss houses to build out their German retail offering, from offices to people to staff. It was worth a lot of money. And again, I might refer to this often big imposter syndrome. I'd probably oversold my capabilities. I've never done it before. Why would you entrust someone so young with such an experience? Fastly, they put me up in the Frankfurter Hof Hotel, beautiful hotel. I felt like $1 million, even if I wasn't making it. I proceeded to build a team to build out this operation. While I was away, dark things were going on inside the home business. There was a positioning for power. This Swiss bank that I had these very deep relationships with, they'd hired someone new into the firm who said he also opened those relationships. And when I got back, I couldn't get into my office. And it was all a bit junior boys' school and writing on the wall. And I remember I was getting married in about 8 weeks. And I could feel like this. They owed me a lot of money in commissions. I could feel the dagger of, because I'd seen them screw so many people over the years, people who had made really big trades, not getting paid properly. And I'd always been quite close to the senior management, so I'd never really experienced that, but I'd seen huge staff turnover. I thought, it can't happen to me. It's happening to me. And sure enough, coming to work, sitting down, HR are there. I'm under NDA from this. So I don't even know when an NDA expires any longer. I mean, this is 20, 30 years ago now. They fabricated this reason for my dismissal. It was like 8 weeks before my wedding, and half these guys were invited to the wedding, including the boss. And they let me go. And I had to take the court, lawyer. And again, I was learning a lot, but I'd rather not have learned that, because I was being hugely successful for them. There was no need for this to have happened. Just bad management, bad business, bad people doing bad things. And you learn. I did learn from that. I kept thinking I'd never treat anyone like this. I'd never do that. Why are people doing this? It's short-term greed over long-term need, and I'd never want to be like that. So I left them, had my wedding. Some of them turned up. The senior people turned up to the wedding. So I remember when I was giving my wedding.
Drinks.
I remember the wedding was expensive. I remember standing out saying, "It's nice to see my ex-colleagues here, especially you for firing me. Thanks for coming." Anyway, married Emma, my beautiful wife, went away on honeymoon, came back, and said, I think at that point, I am never going to work for anyone else ever again. When you get a job, there's no try and test it and see. You're locked in, unless you want hired. They'd be turning over jobs, and I've done enough of that. I thought, I've just got to do this myself. I can see what's wrong with these businesses and why people have done it. And maybe if I build something based on values, treat people well, look after your customers, pay people properly, maybe I could grow my own headhunting consultancy business. So, came back, set that up, started that firm, and had started, one of the guys who was over there, one of the biggest billers of this other firm, the guy who'd been using my name, to come and join me. And we set up our first headhunting stroke consultancy business together, targeted on the financial markets. Part of my NDA, and they settled. Obviously, the last one had to pay me. Didn't go to court. They wrote a check, so I had to sign this NDA to not speak about the reasons why I was let go, or reasons they've presented to me for being let go. And I was very, very foolish, actually. So I was on a 1-year lockout, and I think on the 11th month, 3rd week, 4th day, I'd landed a contract again with another Swiss bank to hire someone pretty senior. They needed to advertise to get a visa. And they said, would you mind running the advert for me? We'll pay you £20,000-30,000 or something. You manage all the response. We've got the person, I think. So if anyone good comes through, we'll have a look. I said, of course I will. It goes in the FT, it'll get the company brand in there, but awesome. And I was young still. I was 25, 26. I put in the reference code 00012ME, one to me. And, because it was still a client, obviously, of the last firm, and it was published on the Friday before the Monday that my lockout finished. And the Tuesday, I was served court papers for breaching my, that's how vindictive they were.
They're watching you the whole time.
Absolutely. So but we fought it and we won it, and just cost money and time, and, just made again reflect that again, you wouldn't treat people like that. Why would you? You're making money. It's great to see your competitors do well. There's plenty of the pie to go around. Why would you want to constantly be forcing, through these arbitrary forced legal processes, the locking down of potential good, strong, funny, happy young people to scale their wonderful new businesses? And there's a whole group of people in the world who are miserable old toads who don't want that to happen. I'd use leverage and power and money to stop it. And I just never wanted to become that kind of person. But anyway, so we built that business up, and then I was doing a lot of business with the banks, cross-asset, all front office, equities, fixed income, credit, helping build, client brokerage businesses, capital introduction businesses, becoming well-versed, not in financial theory, but in finance generally, and the people and the culture, the relationships and how they all fit together. Between us and, my partner was helping hedge funds launch and build, and, building their marketing teams to raise capital. And then I was approached by I wasn't approached, actually. I was having a very drunken lunch with the head of IT from Swiss Bank. And he was recounting how the week before he had a falling out with his boss, who was just below the board, and that it had resulted in a bit of a fight in a car park in Geneva, and that he was about to be made redundant as a consequence. But he's got this business idea, and he's a technician, albeit with a personality, because he was managing probably thousands of people and not direct reports over the company. And there were some other guys, he said, from Chase Bank, who developed some software. We go in and help build, would I go in and help build and manage that business? Because they were technologists. And I said, yeah, absolutely. Why not? Sounds fascinating. We'll merge into you. We'll build this thing together. And that was the beginning, really, of kind of the proper order and structure in my real business entrepreneurial life. I turned up on day one, and we had offices on Gresham Street, all 6 floors. I think it's 5 or 6 floors were ours. I don't know why they'd taken such a big lease. The building was empty inside. I could drive my Vespa up the 20 steps to the office and just park it in the lobby. I'd kick off my shoes, go up in the lift, go on the 5th floor, 4th floor, I think we were on. And that was it. Day 1, day 0. There was nobody there, just me, colleague. And we built and scaled that from a software development firm into a software testing business that a few years later we sold to a German listed company for multiple millions of dollars, tens of millions of dollars. And that was my liquidity event. And I was young, I was 32.
Well, you were building this tech company. What was the status of your headhunting consultancy?
It was inside because actually the business was originally a software development business. So it was for asset-backed securitization. So the software was being sold to banks. If you were doing asset-backed securitization, you could open up hundreds of thousands of line items or an Excel spreadsheet in a bank on old technology. That could take weeks. And you're trying to price the basket, the risk around that basket is just really inefficient. So these guys have developed some code and a software package that could just be plugged in. And indeed, that was where the opportunity was spotted because it was just being plugged in. So a lot of the major international banks support it. They were just buying it and plugging it in. And one of my senior guy, actually the head of the firm, the chief exec, said, at one lunch I was with the head of technology from one of the German banks and said, look, you just plug this in. There's no one isolating tests. You really should be isolating all of your software and testing it. There's viruses, breaking systems, a lot of legacy technology that it interacts with, and he said, well, we've just started thinking about that. Can you do it for us? And we said, yeah. And he said, well, how much is it going to cost? And we looked at each other and we said, well, about £2,000 a day per person. We said, okay, fine, I'll take 10 on Monday. So we built from the headhunting business, which carried on building and growing, servicing front office position. We built a technology consultancy business supporting the software business, where we developed and built a whole, actually, it was the first, I think, independent software testing business in Europe. And so we were finding people to come into that. There were, obviously long duration training courses. They'd either go on contract into the banks or they'd be employed by us and then used for big consultative projects. And as the .com, it wasn't .com boom then, it was just the technological evolution, internet banking was becoming a thing, so all these internet banks were early days of real internet banking and retail banking. So the demand was huge. We went from 3 people on day 1 to 60 people on, month 5, and then 120, and then 160, and then 190 people in multiple jurisdictions. And it was all very, grown up, proper finance team, managing things, and lawyers, and, all of the things I've never really had before. Suddenly my eyes were opened, and the ability to engage and interact and learn, and, seeing other people operate. Who had obviously been through some of the parts of this journey, albeit in bigger institutions. And so I was kind of the entrepreneur helping drive it. And they were the guardrails around saying, and I remember we used to have meetings every Sunday morning at 7:30, 8 a.m. Now you can imagine, 28-year-old guy. My hobby was DJing, so I used to play at clubs. Still got a studio at home now. The kids now DJ at parties, but I was big into house music. So I'd often leave a club 5, 6 in the morning, go home, change, and then go into the board meeting every Sunday morning. Luckily it didn't last longer than maybe 6 months for everyone decided that's a pretty bad and antisocial idea and we can't maintain this pace. But it was really exciting, that growth and the challenges that were being thrown at us and seeing that firm scale very quickly. We had a bid on the company within probably 2 years, I think 18 months, 2 years, an American firm coming in actually to complete. And it was 2011 because they were coming in to complete the day the towers fell. And another big learning curve. I'd gone from thinking, okay, I'm going to be reasonably compensated for this limited journey that I've been on. The dream has really happened.
This is 2001. This American firm was for the headhunting consultancy?
Yeah, the whole thing.
The whole thing. So you started with the headhunting consultancy and then you spawned this software business.
We were all together. So we just had this. If you looked at it now, you would think that's a weird setup. And indeed, this leads into another part of the journey, which it wasn't a weird setup. So we had actually the headhunting business provided a lot of the working capital required to scale the software testing company. Because software testing was, a contractor, but rather than using invoice factor-based investing, say I'd getting charged 2 or 3% on the money. We were booking big chunky fees through the headhunting business, which was sitting on cash in the balance sheet. So we could run our own contractor books without the need for financing. So it just made the whole thing more economical. But when it came to actually, so in 2001, when we almost sold, we didn't, obviously, because literally the next week we went from having 150 staff and 30, 40 big international contracts. So those contracts literally the next day, or the next week, been cancelled. We're not spending any money. Everyone retrenched. It was it was a hideous event. And the reaction, actually, I think from a lot of business people, again, it was hideous in many respects. It was like, protect these are big firms with big balance sheets. So let's just protect the firm. And lots of people were made redundant. There was lots of let goes. And obviously then the financial crisis, then came after that. But it was really challenging. We had to scale down, but we said it to the people that work for us that we understand you've got to go. There's no work, but we will pay you until you find work, either 100% or 70% of the salaries, as much as we can to make sure that you're not, another consequence of bad news from this, awful event. And we, 70, 80, 120 people, I can't remember, they all left. They had to go find work elsewhere. But then when the market started picking up again, because we had acted quite honorably and tried to, values again, when we looked at rescale, a lot of those people rejoined the firm, came back into the business, helped scale it quicker. There was a lot more loyalty as a consequence of that. And just good, nice business practice. No lawsuits, no litigation, not trying to fuck the guys in any way. We're just going to try and do what's right for the people with the resources that we have available. And then when we did finally getting around to sell it, it was like, okay, there's another interested party. It was a German listed company. It's like, okay, firstly, hopefully this isn't another precursor to another awful event. So let's get this deal done and done quick because we don't want to be in touching distance and see it walk away again. So let's get the deal done and done quick. But by the way, they ain't going to want this headhunting part of the business. So I will MBO that and take it off again and park it separately and we'll rebuild it. We'll scale that. So that's what we did. We got the sale thing, MBO'd that business, took new actually bought offices in London, put the business in there, and then scaled that into, not a massive firm, which is turning over this peak 9 or 10 million pounds a year. Then the financial crisis hit. And again, it was, making lots of money, really good fun, lots of intellectual curiosity, big evolution in hedge funds at that point in time. We took offices in Hong Kong and, we were trying to scale to New York and the US. And then the financial crisis hit, literally again the next week. It was like all those contracts, all that work, everything you'd been doing, banks, cut it. And I just came home and said, I can't do this any longer. I just, the morality and the ethics of how these businesses are run, there's just no long-term accountability. And, you saw it all the time, short. I see it now, actually, when I compete for staff. during COVID, starting salaries for quants, went as high as like $250,000 plus a year for basic salaries. And here we are, little old Osmosis, trying to fight in that gene pool to try and get those people on board. And the only thing we could tell them was, you'll be first in, but as soon as the market turns, you'll be first out. There's no loyalty. And I want people to come and work for me for 10, 15, 20 years. And if you want short-term money, short-term gain, then please go to one of the big institutions. Yeah, we'd get the right kind of mindset to join the firm. But deeply frustrating. And I saw that back then, contracts were cut. And I came there and said, I'm going to sell my half of this back to my father, which I did. And I'm going to what am I going to do? Maybe I'm going to retire, go to the beach. I was too young to do that. And that's when the fateful night happened of watching The Inconvenient Truth. And that for me was my catalyst, my Damascene experience. It was the conversion in me where nothing had mattered before apart from making money, building businesses, and so on and so forth. To actually, didn't know anything about the environment apart from growing up in the fields in Lincolnshire and everything. I hadn't really thought of consequence. I think that's what it boils down to, an impact. And I saw that movie, and that kind of J curve, and all very alarmist, I guess. And that was, some people criticize it for that. Others, obviously you can't criticize if it acts as a catalyst in a positive way for good things to happen. So, and I hope it can be considered a good thing to happen from that. I had 2 young children. I said, what? The first thing I need to do is put my money that I bring to work in a way that there's an economic opportunity behind this. Surely, yes, the world needs to change and transition. In any change, there's going to be economic losers and winners. Surely those bright guys in the city that I used to hang out with have fathomed this out, and I can go and put my small amount of money that I've got to work and do good and make loads of money and maybe not have to work again, because this looks like a no-brainer. And went up to meet fund managers and just found a convoluted, compromised mess of funds charging high fees, bad performance. I think they were called ethical funds then, or maybe we'd got into the SRI acronym. I can't quite recall. It was a homogenous hodgepodge of utopian values crammed into, often teams that circulated because it was always the next big thing. So, and then it wasn't. So they get fired by the chief executive. They'd get hired by the next big firm. And, so they just pollute each other's previous mess with their new ideas. And you would end up with, 100 different ESG factors and trying to sort out all the world's problems while making it poorer in the process. And that was, for me, was the light bulb moment.
This is around 2007, 2006.
2007.
It was after the great financial crisis. So you had a liquidity event. You sold off the software testing company to a German company, and then you hived off or MBO'd the consultancy, and then ultimately you sold your share to your partner.
I sold my shares back to the other partners.
Were both of those events simultaneously, like around 2007?
No, we sold the software testing business in probably, I couldn't give the exact date, a few years beforehand, maybe 3 or 4 years beforehand. Then we did the MBA, then we scaled this other firm out. And after maybe 4 or 5 years, financial crisis, so probably 2002, we sold the firm, did the MBA. 2007, enough's enough. And that's the start of this part of my journey, which has been interesting to say the least.
Let's see if I can recap where we're at. You never did the formal studies at university. You just paid lots of tuition to the school of hard knocks, as I said. You had one liquidity event, and then you just decided with this financial crisis, you've seen this movie before, sold out of that. And then you saw the movie, The Inconvenient Truth, and that changed your perspective.
Obviously, the journey is not as easy as it could have been. So, as you'd imagine, I think following that movie, my kids were at the local school here, and, you get introduced to parents and like kids, friends in class, and you have to do these dinner classes, which are always pretty painful, to be honest. But one of them, there is a guy who had just sold a wind farm. I said, well, look, I'm not doing anything. What are you doing? And they said, oh, well, look, why don't we start a business? And I said, well, doing what? He said, well, I know some venture capital firms who need to raise capital, but they can't because there's this gap of knowledge between the investors and so the GPs and the LP knowledge gap within sustainability or within environmental part of sustainability. So it's huge. I've just been through it. I've just sold this wind farm, the bidders on this. It's a very kind of nascent industry at that point, certainly for exits. He said the whole thing was a mess. Nobody really knows what they're doing. So it'd be really good if we could sit in the middle and provide a service where we raise capital for green-orientated funds, be they venture capital or private equity. I said, wow, that sounds great, because I built, I had a headhunting consulting business that helped build cap interest in. So, kind of plugged in. There are quite a few investors. So maybe we could do that. Sounds like a good idea. So, I still have famous offices up in London. So, literally just set up shop straight away. Didn't have any time off. Didn't go to the beach. Didn't have any early year retirements. Literally within a few weeks, I was in London, and we set up this capital raising business. We went to meet this venture capital firm and said they gave us the mandate. But my God, this is easy. I've never raised capital for anyone apart from myself. And there are these people giving me money to go out and find them capital. So then I called up some people I knew in banking and said, look, I've got this idea. And then the first guy I called said, oh my God, what are you doing? He said, look, I've been looking at this. I've been, he'd been in banking for 25, 30 years. It made a fortune. He said, I'm looking to leave. He said, don't raise capital for other people. It's the most ridiculous thing. Start a fund management business. If you're raising it, raise it for yourself. And I said, oh, okay, I'll take your advice. And I come and join us. So he designed and came and joined. Called up a few other people that I knew. One was running equities at HSBC, and another had set up an investment bank in Russia, actually, obviously the war and everything. They also left their jobs. So it's just a great idea. We all threw in some money. So we went from being a capital raiser to launching initially a private equity fund of funds. Boy, was that a mistake. You're coming out of a financial crisis. The only positive was it was really easy to hire people. We hired ex-Goldman bankers, Citigroup bankers, all with experience in kind of green finance, environmental financing. And the people that we hired, I don't know if this is the same with big organizations all over the place, because I'm working inside one, but they were unable to assume, anything like resembling a coherent working relationship, either with each other or with the mission of the firm. That was the first one. So easy to hire because there were no jobs. Impossible to bring together as a team. They were so laser focused on the carry, i.e., how much money am I going to make out of this? Money, money, money. Not we're going to build something cool, and at the end of that, the money will obviously come if you're successful. And obviously, you need to get things in place, but the arguments and the discussions, and it was so expensively frustrating because we were funding this, and they were expensive people. They took a year to write the PPM. That thing should be in the tent. It's so expensive. And we finally got to the end, and I'd hired a head of distribution out of Goldman Sachs to sell it, to go out. And he kept saying, no, it's not ready, it's not good enough, can't sell it. And I said, okay, that's enough, because we're losing hundreds and hundreds of thousands of pounds a month. Someone needs to get out on the phone and actually see whether or not anyone will buy this and give us money to manage. And another one of those dinner parties that I was at, a guy worked for an asset manager, big one in London, discretionary, so he had capital to play, and he was running a couple of $1 billion. He said, come in and have a chat. Sounds fascinating. We're talking a lot about this, movement. We're not quite sure where we are, but there's definitely a lot of conversations internally. Went to go and pitch him, took the whole team, not the whole team, though, like 6 of us, 10 of them on the other side. And he called me after and said, Ben, fascinating. But you do realize we're listed equity, and you've been pitching a private equity solution to the listed equity people. So not interested, but interesting. So I thought, okay, this is these guys, how was I meant to know? The team should have known. Remember, this is 17 years ago now. So obviously I've learned a lot since then. But these were the very early days. Captain Chaos, I think I often refer to my self out of the time. And he said one thing, and I sometimes wish that he hadn't said it with hindsight. He said, if you come back with a listed equity solution, I might fund you. Because there's definitely the philosophy of transition, environmental transition, the economic opportunity that exists around there are as much in the listed market spend as they are in the private market. So I went back to the office and the team was squabbling and arguing about their carry, locked in a meeting room. I sat there with a few of the other founders who actually had listed equity backgrounds. I said, these guys, I think they're just going to we'll pay them until they find other jobs, like we did before with the other firm. We'll be fair and get them desk space. We called them all together and said, look, it's just not going to work. We're asking for 10-year money at 2% a year with a team that just finds it impossible to talk nicely to each other, never mind to investors. And there's a lot of skills here, but I just don't think we can bring the best out of you, nor do we have a long enough runway. So with all due respect, given the demands on the business, we've got to shut this enterprise down. And it's a really hard call to make because it's like shooting your pet dog. You just don't want to do it. It's like this big idea that you've been working on and spending so much money. And it was just really surprising. They just took it so well. And then they're like all huddled together and came back and said, oh, we can get this a go by ourselves. But, oh my God, you've been exhibiting all these kind of characteristics of a team that will never work together. And now all of a sudden, when the shit has hit the fan, you found that thing that bonds you all together, which is the fear of failure. And that's what I've been living with since starting this. I wake up every morning, even today, I wake up with the fear of failure that gets me out of bed every day. And you found it. So look, I'm happy for you to sit here in the office. It's free space. Crack on. They went at it for 8 or 9 months before they kind of disbanded and got jobs elsewhere. And good luck to all of them. Some have had remarkable careers since then. But I do note with most of them, none of them put Osmosis on their CV. Although they're starting to add it back in, which is very funny, actually. Some of the people that we hired, they call it reputational risk. Can't be associated with that Osmosis firm. It's failing 10 years ago. I don't want my name. Now we're at $17-18 billion. That I've seen some of them now putting Osmosis back into their LinkedIn profiles. All of a sudden, we were part of that. And, it's nice varnishing history, isn't it?
Oh, this company that you set up originally with this chap that you met at one of the dinner parties, that was the original Osmosis.
That was the original Osmosis. You went from cap raising to private equity fund of funds to what it is today, systematic listed equity, because that investor in that meeting said, if you build something that's capturing this green revolution in an index style format, and it's low cost, and it's liquid, so ideally he added in an ETF format, I will look at it, no guarantees, but if it looks good, I'll give you 50 or 100 million. I kind of dug a bit of a hole for myself. I'd spent quite a lot of money failing at private equity and said, let's do it. So we went off and we built a green index called GLE, Global Environmental Enterprises. And it was fascinating. We partnered with HSBC. They had a big data set. So we really put some structures and rules around a data set, which targeted companies with 50% more of their revenues from one of, I think, 12 or 13 different themes across energy, water, waste, agriculture, food. And then we weighted it because the issue with a lot of the indices, and this is when I really started financializing myself. I was really focused on index construction, on the trade. So I was kind of I had a little knowledge, which is often a very dangerous thing, but it also allowed me to ask really stupid questions with a lot of confidence because I wasn't meant to know. So I could test out theories and ideas, which often found black holes, actually, and dark corridors that you don't want to go down. What have you thought about? What we did see it then is that it was actually, I think it's around the time that a lot of doctors, German doctors and dentists, had lost an awful lot of money on investing in green index products. There were a few around. I think they were called like FAM and TAM, wind and solar indices. And so the risk was, there was no diversification in the portfolios. it was either sink or swim. So you were burdened to the regulatory status within a country. These things would either fly through the roof or crash through the floor. And like all investors, they see momentum, they crowded into these things. Regulatory landscape changes. Oh, they lost everything. And we said, actually, there's a smarter way of doing it. So, we set up sensible rules, portfolio construction, selected these 100 stocks, weighted them proportionally, controlled for risk. And it was a beautiful, beautiful product. And I took it back to that guy with the dreaded back test, everything was hypothetical. And said, it looked pretty good to me, It's got a, reasonable bold profile. The return looks pretty good. I'd buy it. And actually kind of that's what was driving me. If it was good enough for my money, then surely it would be good enough for other people. That was kind of the litmus test. And he told me, I said, okay, I'll do it. After obviously some consideration. But he said, I'll do $100 million. And I remember leaving that meeting and thinking, no wonder everyone in the city is so rich. This is easy. And it's been hard to get here, but one meeting, $100 million. Back in my mind, it's like thinking, I knew 20 meetings, I'm at $2 million before I know it.
You can do the math.
And unfortunately, it doesn't work like that.
Yeah.
So
let me ask you some questions here. You had no background in the financial industry. How did you get the fund registered?
For the listed equity business, so the one we have now, the first condition was, and again, this is just another hurdle, which was, he said it needs to be an ETF format. And this is early days, this was 2009, something like that. So ETFs weren't really a big thing in Europe at that point. So you couldn't go to an ETF provider and say, host this. We had to build our own ETF platform. So we had to go to Ireland, choose independent directors, set up the fund structures, get regulated, have the regulated capital, timely. And we were dealing with people actually who were just as ignorant, I would argue, as we were at that point. So the lawyers, custodians, administrators, they were all reasonably new. So we were getting, sometimes really good advice, but sometimes really bad advice from professional services companies who were leading us on this journey to launching this ETF. But we got there, so it took 9 months, I think, 8 or 9 months, maybe a bit longer. We established the ETF platform. This was going to be our first, obviously, of many. Went back to the seed investor and said, right, vehicle, index, independently constructed by this index provider, all set up, launch dates, I can't remember the date, August 1, whatever it was. And he said, there's a bit of a problem. I said, what's the problem? He said, we've just been acquired by another asset management firm and I've been made redundant and I can't honor the seed commitment. Seed is seen, so, it's like letter of intent and they're as good as wallpaper. So, he said, but I have organized for you to go up and meet the guy at the new organization to have a chat with him. And he runs that ethical business. They've got 30, 40 billion across hundreds of billions in the firm. I'm sure he'll look after you because it's the honorable thing to do, given you've done all this work, spent all this money. So I think they were based in Glasgow or definitely somewhere in Scotland, Edinburgh or Glasgow. I remember early morning flight and it with rain, very grey, dang. Turned up early, 8 o'clock in the morning in their offices, 8:30. Go and meet this guy. He sits down. It's this fascinating product. My little heart bubbling away up of that feeling of butterflies. Like maybe he's going to give me 250, not 100. He said, but there's a problem. He said, we run active funds here. We've got a small index business, but all our socially responsible investments are active. And you've got an index product that charges half the fees, if not less. And on the back test, outperforms us by 3% a year. So you're effectively, if we bring that product in, going to cannibalize the fees we're making off our investors. So we're not going to honor the commitment either. And it was like, I learned a lot that day. Again, I was learning, this isn't how socially responsible. This is about how people are lining their pockets off other people's money. And it's not about doing the right thing. These are careerists here. It still exists a lot today. Why there's a lot of this anti-ESG background, one of the components driving. I flew back to London and just thought, oh my God, now I'm really in the hole. So business number 2 in the financial markets is about to blow up. So private equity funds are now listed equity. I told him, I said, you know what? I'm so into this. I am fascinated by it. I love it. I'm enthused by it. I don't necessarily like a lot of the people, obviously, at this point that I've engaged with, but I'm sure there's more good people out there than bad. And I want to prove this out. This is an investment opportunity. So I'll seed it myself. With the last remaining bit of my money, with some of my other partners, we threw it into the fund on day one. I think there's about $5 million of launch. And the thing was eating capital like you wouldn't believe. Well, and it was the beginning of the recovery in global financial markets. And it was just awesome for everyone apart from green investors. It's quite similar to today. So every day the market would be going up and every day green stocks would be going down. And I was looking at my last bits of my capital just being eaten away through this while I was flying around the world, meeting you. The great thing was everyone wanted to talk. We've developed this really cool product. We've come out of nowhere. They've got a great story, We're new, we've innovated, and that gets you meetings. It also at the same time gets you the 3 no's of the apocalypse, which is no brand, no track record, no assets. And then the 4th one, no chance. Yeah. Innovation in financial markets is fine if you're a banker at Goldman Sachs selling credit default swaps to unsuspecting German insurance companies, blowing up the financial markets. But innovating in sustainable finance or asset management, buy it, wait. We'll see if anyone else buys it first, and then we'll wait 3 years. It's the only industry in the world where you can build, innovate, deliver a product, and everyone turns out and says, oh, yeah, we love that, but we're going to wait 3 years till we buy it.
3-year track record. Yeah.
3 years is a lot of money, a lot of capital you need to keep a firm going. So it kills innovation in the industry. It blocks out, new funds starting, launching. One of my missions at the moment actually is to try to lift up the entrepreneurial emerging managers through dialogue with, regulators and, ideally governments as well to try and loosen some of the restrictions and barriers to entry that there are, because you're just ending up with an oligopoly.
Up to this point, you had only run some money of your own and you didn't have any outside capital.
We were authorized to raise money from everyone, and we'd only managed to raise it from each other across the desk from each other. So, our capital raising activity was centered very much in the office at each other. But obviously we were flying around. I was flying around the world, meeting investors, because the thematic made sense. The portfolio construction made sense. But I could completely understand as well, a new no background in finance, unconventional, dealing with imposter syndrome, obviously still even today, regarding that. But asking people for 10 million, 50 million, 100 million, obviously people are going to say no, wake up, be realistic, but also perseverance is kind of something, I haven't had an easy journey necessarily through my career, and no's aren't always no's, and they do sometimes become yeses. You just have to find the exceptions that prove the rule, and they exist in every industry. And those exceptions that prove the rule did exist, but, in small capacity, and we got the fund up to about $30 million. So not huge. And actually, it was at the end. I mean, we were burning money, losing lots of money. Still resistance. The performance hadn't been great because, there was no recovery, still in green stock.
What years are we at now?
I think we're about 2009, 10.
Okay. That's still the doldrums of...
It was very hard. And actually, persistence and perseverance always open up new doors when you keep knocking on them. One of them will open. As part of my just general cold calling, I didn't even have any contact. I exhausted friends and friends, and they didn't want to give me any money, the right inside institution. I'd worked with them through the private banks, and they didn't want to give me any money. And I had a blue pensions phone book. It wasn't on the internet even then. It was blue pensions. So that's just cold calling in a room. Like, hello, my name's Ben Joe, I'm calling from Osmosis Investment Management. You know, doing that 20, 30 times a day and getting meetings and everyone telling us really cool what you're doing. We're really excited. We wish you all the best. Come back in 3 years, you know, and so pretty persistent response. So, you know, at some point you learn no, but no is getting pretty close to being that no. And I made a phone call actually into Legal & General in London and cold call. And the guy that picked up the phone, I said, hi, my name's Ben Dare. I'm calling from Osmosis. We've developed this really innovative index that captures, you know, green solution-based companies, helping the world transition to a more blah, 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 blah. And we've weighted it to contain and manage the risk exposures. And it's really interesting, and it's very different from what you find from the main index provider, which tend to be market cap weighted, put you in highly concentrated positions across maybe renewable energy, and that hasn't worked out particularly well for investors. So we just think we've got a more sensible investment, a more sensible portfolio construction, and more broadly diversified thematic exposure. And he said, I'm just about to sign a deal with the FTSE for their market cap weighted indices, because we're going to be launching a whole range of thematic funds. I wish you'd got hold of me 6 months ago, because we'd love to have the conversation. I said, it's never too late. You haven't signed. Please let me come down and talk to you, because, you know, it's not just for us. Let us help educate you. We've been doing this. I've been doing this now long enough. I know the landscape. I know how the other indices portfolios are structured. I know where the opportunities are, what the threats are around this, you know, and you'll just listen. And if you don't like it at the end, that's fine. I just helped you ask the right questions before you cement a deal with this index house. And that turned into a 3-month conversation and eventually a deal. We moved our ETFs. So that ETF platform collapsed and the assets were moved across into a unit trust at Legal & General, which is the UK's, I think, largest fund management company, with a commitment from them, albeit on paper, not legally binding on paper, but on paper all the same, to raise $1 billion, I think, in 2 years, because they're vast distribution networks through retail. And then the ETF platform we sold to the next guy who was coming along, who was doing Russian ETFs. So I managed to recoup some of our investment capital that we put into that through selling that platform on to him. So there we were now sitting in an office in London, technically as sub-advisors to a Legal & General fund called GLE, actually, after the index, Global Environmental Enterprise. And I thought, that's it, my problems are solved. We're going to monetize this, you know, and then we can start doing other things because we'll have built a brand, and, you know, it'll be great. This is the beginning of the journey. So I went up and down the UK for about a year, speaking at golf clubs to, you know, financial advisors. I was always the last man on the agenda, standing on the stage to guys that are, you know, girls who had a nice lunch, maybe a round of golf, and probably not all of them there actually when I was speaking, a few of them asleep, of me making the case for sustainable and environmental investment really fell on deaf ears. You know, there wasn't much interest or appetite, and they raised their money, you know, very hundreds of thousands against my 28 million that I'd done in a few years, and their huge sales force, they just hadn't raised any money. But I was still flying around the world, going back into investors, like, okay, another year's passed. This is the performance, you know, because we could do segregated accounts, you know, there might be other things, do advisory work. And then I suddenly started thinking, I've just got to stop selling this product. You know, I need to start listening to investors. It was a moment of realization that sometimes if you believe in something so much, because it's just common sense that these companies should do well over the long term, it doesn't necessarily mean that people from a fund management perspective are going to buy these funds. It just doesn't work. Optics, branding, you know, longevity of firm, all these intangibles that are associated with fund management also play a role. And sometimes it's only duration that will give you those, to give you that exposure that you need to raise assets into the really sensible, pragmatic ideas, like, you know, climate change and based investment. And I said, I've just got to start listening to investors. Let's do one more global roadshow, go around the world and listen, because you're not buying what I've got. Tell me what you need. Flew around the world. I probably did 150 odd meetings with asset owners, wealth managers, and there was a commonality to that feedback. We do get that there is an environmental issue. We do get there's going to be consequence. just don't like this small mid-cap exposure for many reasons. One, we can't allocate in size. By definition, there's small and mid-cap, and we're running pools of 20, 30, 40, 50, hundreds of billions of dollars in capital. So we need to be able to put lots of money to work. Secondly, we don't really like the volatility. We don't really like our money being in funds that are up 40% one year and down 60% the next. It keeps us awake at night. And for the amount of capital that we can allocate, it's going to create more of a headache for us than the benefits that we can potentially get from the fund. And thirdly, we just think there's probably a bigger opportunity set out there. We just don't know what it is. So what we will tell you is what we would like to see from a sustainable investment perspective is a fund that has a sustainable investment thesis driving the return profile. Secondly, we'd like it to be able to accommodate huge capacity so we can do this in scale and have meaningful impact with our assets. Thirdly, it has to target and deliver a better risk-adjusted return. And fourthly, it's got to be operated by a group of people that are going to be around for the long term so we can really get the home. I came out to London and said, oh my word, that's fascinating because it's not what we've got. But what we've got, we started looking at that portfolio of 100 mid-cap, small-cap, solution-based companies, developing the most innovative technologies, and really fascinating to get to know those companies and understand their businesses. But we started thinking about, okay, so who are they selling those goods, products, and technologies and services to? It's me at home because my water bills got more expensive and my heating bills are more expensive and taking waste to the landfills got more expensive. So there are solutions for hundreds of millions of people being developed around the world. Well, who are the biggest consumers of resource? What is the biggest companies in the world? So surely they must be buying these goods, products and services from these companies, or at least innovating with our own R&D. For why? And I think I was just listening to one of your previous guests' podcasts, and it was about some SDCL, Sustainable Capital.
Yeah, Jonathan Maxwell.
Jonathan Maxwell. So we have the same investment philosophy. He focuses on the private markets as resource efficiency. And that's where our light bulb went on it, for resource efficiency, which is the biggest companies in the world and the biggest consumers of resource. They have the most environmental impact. Surely, if we can find a way of modeling their resource intensity and we can find the winners and losers within the largest companies in the world, we can build a large cap, highly liquid, low cost, targeting resource efficiency, so the sustainable investment thesis. And surely if a company uses less to create more, maybe it's got a better operating margins or have less quality characteristics as a portfolio company. Maybe it might just deliver greater return on equity. And that was the beginning of this part and scaling up of Osmosis, focusing on the pragmatic opportunity set of identifying the most resource-efficient companies in the listed markets through the utilization of environmental data. Once we had that idea, it was then like a great idea, and you'll have 10 or 20 ideas a week in this industry, and none of them come to anything because you've got to be able to prove it out. We've got to be able to prove it out with data in a systematic way. And again, what's that going to need? People, budget, time, headcount. Just to get the same old repeat process again. So it was like the third coming of Christ. We were being reborn yet again from private equity fund of funds to small mid-cap green technology solution into this new business, or new fund thesis of resource efficiency.
So that's really the genesis of the current Osmosis. Are we at 2012 or what year are we at?
I think we launched our first fund there around 2012. So we probably started to work on it in 2000. It wasn't easy. Again, all these things just make sense when you speak about them. So it's like, okay, so just identify the most efficient companies using environmental data, prove out that there's a proxy for quality yet to be priced by the market, go off and raise billions of dollars and create a really successful business. How hard can that be? Well, the first starting point is you've got to find the data, So this is a quantitative process. So we want to quantify this. So it's got to be objective data. So does the data even exist? We didn't even know. It was just a nice philosophy. And that was the beginning of this challenge. This whole 13 years of what we've been doing in this chapter has been one long challenge, starting with the day that we came up with the investment philosophy and thesis. To prove that out first, to be able to create the back test second, to market that back test third, to convince investors that the back test is good enough because investors hate back tests, to capture assets, to get investors scale the firm, to grow, to get meaning, to get scale, to get size, to be able to do, engagements and launch more products. And, all started with that meeting when really I should have just gone home at that point.
Hey, this is Scott jumping back in. If you're anything like me, your head is probably still spinning from Ben Deer's incredible personal story as a lad coming from northern UK to founding a sustainable investment fund midlife, even though he had no previous asset management experience. And from there, his journey from a private equity focus to a small to mid-cap green technology fund focus to finally stumbling on the holy grail recipe after he did a round-the-world listening tour when investors told him that what they really want is a highly liquid, low-cost fund that invests in the largest and the most resource-efficient, publicly traded large-cap companies in the world. So be sure to join me in the next episode when Ben and I do a deep dive into how he focused Osmosis Investment Management to do just exactly that. And we discuss how Osmosis has become a leader in sustainable investment with over $17 billion in assets under management and the impact it's driving today. Spoiler alert, it wasn't easy, there were no quick wins, and no shortcuts. As always, thank you for listening today, and be sure you don't miss part 2 of this real-life Odyssey.
You've been listening to SRI 360. If you enjoyed it, please hit the like button and subscribe to get future episodes. You can find an archive of all previous podcast interviews and more articles and information on SRI, ESG, impact investing, sustainable investing, and socially responsible investing at our website, sri360.com. If you'd like to read more lessons learned from world-class SRI investors, get a copy of Scott Arnell's book, Sustainable and Responsible Investing 360. It's a must-read for anyone wanting to know more about investing for positive social, environmental, and ethical impact, all with market financial returns. These are the stories and tactics of those leading the way as sustainable and responsible investing goes mainstream. Sustainable and Responsible Investing 360 is now available in hardcover, ebook, and audiobook format wherever books are sold.